Erin, thank you so much for joining us. What does this industry view as the biggest risk at the moment in terms of ESG and the risk posed by climate?
So I think the main thing we want to look at is climate in terms of risk, and we're talking about non-financial risk, but it actually is a financial risk. Because if we're not looking at the climate impact on our portfolios, we're potentially avoiding the actualization of our valuations. What do I mean by this? Mark Carney specifically called out in his original paper called The Tragedy of the Horizon, which was something that's so far away we ignore it. And he wrote a paper last year presented to the European Commission called The New Horizon, saying that horizon is now in our face, and if we don't change our flight plan, if we don't change the way we invest, we're all going to crash and burn. So instead of crashing and burning, let's look at information to assess the risks, both in the way we invest and the way we look at the transition. So we want to do this kind of transition economy to get to a low carbon environment, and then obviously optimize our returns. Because you're not going to get a lot out of an exit strategy if your asset is stranded or bankrupt or otherwise impaired by climate risks. Specifically, the California electrical company, PG&E, went bankrupt because of climate risks. Did any investor think about that when they invested? FT was talking about the energy stocks this morning that are all taking a dive. And we've heard a lot about these stranded assets in fossil fuels. So if we're not pricing our carbon risk into our investment criteria at the time of our entrance and monitoring as we go through, we are not actually adjusting for a climate impact economy.
So the direction of travel here is due to the risk rather than any sort of utopian view of this industry suddenly becoming very philanthropic in terms of ESG.
Yes, and it's a financial risk. And so I really think we need to avoid talking about these terms of climate as terms of non-financial, because they are a financial risk, which is the whole basis for the task force on climate disclosure, right? It's on financial impact. We as private markets investors look to maximize returns. So we're looking to help investors deliver their fiduciary duties to deliver optimal returns. The only way we're going to be able to do that is we actually look at integrating the climate risk and the valuation of that on those portfolios.
And in terms of the actual action you're seeing at the moment, how positive, how optimistic are you about what this industry is doing and whether they are taking enough action?
So I think we really have to think in terms of GPs and LPs aligned that we need to do much, much more. And the UNPRI has actively required that people consider the task force on climate-related disclosures in the 2020 reporting. We don't have as yet required reporting, but I think that is coming, especially with the EU Green Deal. I think also there are a lot of frameworks to help people look at these questions, and if they don't do it, they're missing out on a big part of the assessment of risks, but also of return of their portfolios. So it's about information, reporting, risk, and return.
And you talked about a framework there. Will that include regulation more and more, do you think?
I think some people will need regulation for it to happen, but ultimately the best practice performers will be the ones that don't wait for regulation. If you're going to wait for regulation, you may be kind of too late in the game.
Are you surprised by how rapidly this topic has gone up the agenda? I mean, even 5 years ago at this conference, you would have seen a small section of one stream dedicated to ESG potentially, and now it is right there at the top.
I think that is relevant. We were just discussing actually over the break of how many people are in the larger than last year room, and that we'll need a bigger room next year. But ultimately, if we're really good at this, this will no longer be a side section, but in the integral part of the conference of how are we measuring, how are we actively monitoring this, and how are we increasing those returns because we consider all risks around the portfolio.
And what would you hope would be the key message that there's something like 3,000 people coming to this conference will take away from hearing what people like you have had to say?
That when we invest, we're really looking at people, profits, and planet, and that those things can be combined to deliver and measure what we treasure. That is the informational reporting, risk, and returns.
Fantastic. Thanks, Erin. Thanks for sharing your thoughts.
Thanks.